There are some new certainties regarding the US tariffs, which has been reviewed last week. Now we are subject to 19% reciprocal tariffs. And some may consider that this rate is a small win for Malaysia, alongside its regional peers such as Cambodia, Thailand, Indonesia, and the Philippines. Well, other countries like Brunei, Laos, Myanmar, and Vietnam are facing higher rates. So, because of Malaysia's poor investments and open trade policies, the US has become Malaysia's key trading partners with high values of exports and imports. As you can see from figure 1A, US is one of the top 5 exporting countries, where we exported about 200 billion ringgit of goods to the US. Also, at the same time, Malaysia also imports about 126 billion ringgit of goods from the US. So this amount is resulted in a trade surplus because we export more than imports, which in turn placed Malaysia on the list of countries subject to reciprocal tariffs. Since the tariff announcement in April, several key economy indicators have shown moderate growth. However, some components of the leading composite index, including the Bursa Malaysia Industrial Index, real imports of semiconductors, and the expected sales value in the manufacturing sectors, show signs of slowing down from April to May 2025. But Malaysia trade surplus, however, follow typically a seasonal patterns. As you can see from this chart, that every 3 months there will be a dip in the trade surplus. But the recent data from April to June reveal a fluctuating trend. The trade surplus narrowed significantly to 5.1 billion ringgit in April and then to 760 million ringgit in May, before rebounding to 8.6 billion ringgit in June 2025. This suggests that Malaysia's exports remain competitive, with the net inflows of funds indicating potential for currency appreciations. Despite these trends, for the first half of 2025, Malaysia's total exports experienced a positive year-on-year growth of 3.8%. Table 1 shows that E&E sectors is the largest contributor to the growth, accounting for 43.2% and showing a strong growth of 16.3% year-on-year, despite experiencing lower growths in May and June. This shows that the sectors remain stable and resilient amid looming tariffs. Exports for other E&E related products such as machinery, equipment and parts, as well as optical and scientific equipment, are relatively steady as well.